Look, if you're still paying for your groceries, gas, or even your morning coffee with a debit card or, heaven forbid, cash, you are literally throwing money away. It's 2026, and the game has changed. Inflation has made everything more expensive, but the banks are fighting harder than ever for your business. Today, I'm showing you the top 5 credit cards that are turning everyday spending into a massive secondary income stream. Before we dive into the specific cards, we need to talk about the 2026 benchmark. A few years ago, 1.5% or 2% cash back was considered elite. But today, that's the baseline. If your primary card isn't giving you at least 2.5% on everything, you're losing. We're looking for cards that offer massive multipliers on the things you actually buy, like high-speed transit, sustainable tech, and groceries. First up is the Everyday King. This is for the person who doesn't want to juggle 10 different cards. In 2026, the standout is the Premium Rewards Plus. This card offers a flat 2.5% back on every single purchase with no caps. Think about that. Whether you're buying a pack of gum or a new MacBook, you're getting a 2.5% discount automatically. It's the ultimate set-it-and-forget-it tool for your wallet. Now, for my viewers in the UK and Australia, the landscape is a bit different due to interchange fee caps, but the Amex Gold remains a global powerhouse. In 2026, they've boosted their dining and supermarket categories significantly. We're seeing up to 4 points per dollar spent, which, when redeemed correctly, effectively functions as a 4% to 5% cashback return. It's a must-have for anyone who enjoys the finer things in life. Let's talk about the groceries and gas specialist. For most of you watching in the US and Canada, these are your biggest monthly expenses after rent. The Blue Cash favorite has updated its 2026 terms to include a massive 6% back on streaming and online subscriptions, and yes, that now includes your AI productivity tools and VR fitness memberships. This card alone can save a typical family over $1,200 a year. But wait, here is where it gets interesting. The digital wallet strategy. In 2026, more vendors than ever accept Apple Pay, Google Pay, and Samsung Pay. There's a new breed of cards, like the US Bank Altitude Reserve successor, that gives you triple points on all mobile wallet transactions. If you use your watch or phone to pay for everything, this is essentially a 4.5% flat rate card. Why does this matter so much? Because of the velocity of money. If you're earning $2,000 a year in cash back and you're just letting it sit there, you're missing the point. If you take that cash back and sweep it automatically into a high-yield savings account or a low-cost S&P 500 index fund, that free money starts compounding. Over a decade, your grocery spending could literally fund your child's first year of college. Next, we have to look at the dining and travel hybrid. For the 25 to 45-year-old professional, the Chase Freedom Flex has become a juggernaut in 2026. They've added a permanent eco-travel category, giving you 5% back on electric vehicle charging in public transit. Plus, their rotating 5% categories now include things like home office and wellness, which perfectly fits the hybrid work lifestyle we're all living. Let's address the elephant in the room: annual fees. I know, some of you hate them, but in 2026, you have to look at the effective annual fee. If a card costs $250 but gives you $300 in credits for Uber, gym memberships, or streaming services that you're already paying for, the bank is actually paying you $50 a year to hold their card. Always do the math before you say no to a premium card. For my side hustle entrepreneurs out there, you need to keep your business and personal expenses separate, but that doesn't mean you sacrifice rewards. The Inc. Business Cash Card has hit a new peak in 2026, offering 5% back on internet, cable, and phone services. If you're running a YouTube channel or an e-commerce store, your overhead is literally paying for your next vacation. Now, a quick pro tip for the Tier 1 optimizers. We call this card stacking. You use Card A for groceries, Card B for gas, and Card C for everything else. By using a simple app to track which card to use where, you can drive your average cashback rate across your entire life up to nearly 4%. That's a 4% raise on your after-tax income without even asking your boss for a cent. But I have to give you a warning. The credit card trap is realer than ever in 2026. Interest rates are still significantly higher than they were a decade ago. If you carry a balance even for 1 month, the 25% interest rate will instantly wipe out all the cash back you've earned for the entire year. These cards are wealth tools only if you pay them off in full, every single month. No exceptions. So, how do you choose? If you're in your 20s and just starting out, go for the flat rate 2.5% card. If you're in your 30s or 40s with a family and high expenses, the Blue Cash or Amex Gold will likely yield the highest return. And remember, your credit score is your most valuable financial asset. Only apply for one new card every 6 months to keep your score in that excellent 800+ range. The bottom line is this: The banks are going to make billions of dollars this year. You might as well take your piece of the pie. Check the links in the description for the current best offers. Some of these have sign-up bonuses worth over $1,000 right now. If you found this helpful, hit that like button and subscribe for more 2026 wealth strategies. I'm here to help you win the money game. See you in the next one.